This is a big week because all eyes were on Bank of Canada's rate decision today, and they finally dropped interest rates since moving it up over 2 years ago. Add that to our soft housing market, and what you might be wondering is what all of this means for Toronto real estate. Well, stick around because we're going to be diving right in. First off, yes, Toronto real estate is softer these days, but it's not because nobody is buying. In fact, buying levels have been pretty steady since mid-2022 and have started to climb since early 2024. The big reason for the soft market these days is because of a flood of listings. Sellers who were holding back over the past 2 years are now finally starting to sell. So this boost in extra supply is what's giving buyers a lot more options these days. Now, even with growing demand, we're still not in a normal market. There's definitely buyers still on the sidelines today, but demand will gradually recover when interest rates start to come down. And once you add this to the backlog of supply getting cleared up, this is a recipe that will continue to keep the Toronto real estate market warm. Now, one thing also to note is that not all Toronto properties will move in the same direction. We are expecting Toronto condos to be weaker from condo completions getting added to the supply. Toronto houses, on the other hand, will always have more limited new supply because of the lack of land, so it's going to be a lot more competitive in the house market. But that's not all. We're also seeing a lot more interest from investors looking to buy houses thanks to Toronto's new multiplex-friendly housing policies. So with faster growing demand and limited supply for Toronto houses, we are expecting that price gap between Toronto houses and condos to continue to widen. Then there is, of course, the trend of falling interest rates. Just 2 weeks ago, expectations for a Bank of Canada rate cut in June was only under 50%, but then inflation numbers came in lower than expected, pushing expectations to 60%. And then last Friday, weak GDP data bumped that up even more to 80%. And it came true. Interest rates fell by 25 basis points today by the Bank of Canada, and it's likely going to continue to trend down slowly from here on. But here's the better question. Will a 25 basis point rate cut by the Bank of Canada actually cause a housing boom again? Probably not. When it comes to affordability, we don't expect a major shift, actually. Each 25 basis point cut only boosts purchasing power by 2.5% for those with variable mortgages. But variable mortgages actually make up less than 10% of all mortgages, and fixed rates have already factored these rate cuts in. So the price bump from a math standpoint is probably even less than 2.5%. At the end of the day, what really does matter is when we see more confidence in the real estate market. And this will continue to boost demand even more. And once you combine this with eventually fewer condo completions, because there was less construction over the past couple of years, this will help to balance out the current weaker condo market. And this will also continue to shift the balanced house market to favor sellers even more. So if your question is it a good time to invest in Toronto real estate right now? Then let's break it down. Number 1, are you getting net rental income? This needs to be yes. And number 2, are you thinking about holding your property for at least 5 years? This should also be yes, because there could be short-term price drops that you need to wait out, although the risk is lower than a couple of years ago because interest rates are trending down. Number 3, can you cover all of your outgoing monthly payments with rent? This should also be yes, so that you can stomach short-term price drops and hang on to your investment to benefit in the long run. And number 4, will prices for real estate go up in the long run? This, of course, is the most subjective, but we would have to say yes, especially in the Toronto freehold space. Falling interest rates, a housing crisis with limited new supply, and a multiplex-friendly housing policy all make a strong case for supporting the Toronto housing market, making it a solid investment with great risk-adjusted returns. And if you're ready to invest in Toronto real estate and want a brokerage to help you make more fact-based decisions, you're in the right place. We focus on buying and selling freehold investment properties in Toronto. So whether you're interested in a multiplex that's ready to rent out on day one, or you need guidance on how to turn a single family home into a multiplex, our team is here to help. We're a Toronto real estate sales brokerage that starts by understanding your situation and then teaches you the basics and then eventually helps you find the best Toronto real estate investment that fits your goals. Are you ready to get started? Just go to this link here and let's get the ball rolling for you.